So you've taken the plunge into commercial real estate investing. Maybe you've bought an apartment complex, a retail center, or an industrial facility. This is definitely an exciting milestone, but you've got one problem: the work of actually operating and managing the asset you just acquired. If you're not interested in becoming an active landlord, handling maintenance requests, collecting rent checks, and dealing with everyday tenant issues, there is still an option for you: hiring a third-party asset manager. And it might not cost nearly as much as you think, which we'll get into here in a bit. First, what exactly is an asset manager? Well, an asset manager essentially serves as the CEO of your property portfolio. Just as a CEO oversees and directs all aspects of operating a company, the asset manager handles the execution and optimization of your real estate business. The property manager is like a VP of operations, taking care of on-site issues and day-to-day functions. As the owner, your role, if you had an asset manager in place, would be similar to being a board member overseeing the direction of the company. The asset manager acts as the linchpin between ownership and property management, developing and implementing strategies to meet your goals. Why would you choose third-party management? Utilizing a third-party asset manager allows you to take a step back from the responsibilities of active ownership while still maintaining control and earning income from your real estate. For investors with demanding careers, limited bandwidth, or lack of direct management experience, delegating to a professional asset manager provides some pretty crucial advantages. It frees up your time to focus on your strengths, like sourcing the next deal or raising capital, rather than getting bogged down in the operational minutiae. Leverages the systems, expertise, and manpower of an experienced real estate operations team. Provides an objective perspective to identify issues and opportunities the owner may not see. It's always nice to have things at arm's length. Delivers high-level reporting and recommendations for strategic direction. Serves as an intermediary to align property management with ownership goals, and allows you to have true passive ownership with limited involvement required from you as the investor. You could always hire them full-time to come work with you, but it's pretty nice to hire a third-party asset manager for your company instead of a direct employee, because chances are good it wouldn't be a full-time job, and you'll save quite a bit of money here. So when does it make sense to hire an asset manager? If you own one or two smaller rental properties, full-scale asset management might be overkill. But once your portfolio grows to a meaningful size and complexity, handing off oversight starts to provide real benefits. Typically, I see investors hiring third-party asset managers when you reach about 20 to 100 units. At this scale, the workload becomes difficult for most individuals to handle effectively while maintaining a separate career. After you've acquired your first 1 to 3 commercial assets, even one large multifamily office or retail property can present a steep learning curve. Maybe you've secured assets in new geographic markets where hands-on oversight is just impractical for you. Maybe you have limited real estate experience and are not interested in becoming a landlord, or maybe issues are emerging on your existing portfolio that require a higher level of oversight and correction. But I would imagine that for the majority of you, you simply want to step away from active management and focus your efforts elsewhere. Let's talk about how an asset manager optimizes your investment. When an asset manager takes over one of your properties, they will dig into understanding every aspect of its current status and any issues. This due diligence includes weekly reporting review, closely analyzing key metrics like occupancy rates, rent collection, marketing funnel conversions, and expenses. Speaking with the property manager to understand strengths, weaknesses, and priorities. Walking the property to evaluate maintenance issues. Look at the amenities, turns, renovations, and curb appeal. Meeting tenants to gather feedback and hear any concerns directly. Reviewing financial statements, vendor contracts, and key documents to spot needed improvements. And conducting market research to benchmark performance and set a strategic plan. Based on this broad assessment, the asset manager establishes action plans to address weaknesses, reduce your costs, improve efficiency, retain residents, and boost performance. For assets requiring heavy intervention, they may take a more hands-on approach alongside the property manager to steer the ship in the right direction. Typically, an asset manager will pay for themselves. Then there's ongoing oversight. On a routine basis, a top-notch asset manager should oversee the property through weekly tracking of key metrics with swift action plans when issues emerge. Is occupancy declining? Are work orders piling up? Is the marketing spend generating any leads? Quarterly budgeting reviews and adjustments based on the evolving market. Are projections realistic? Are rents keeping pace with your expenses? Overseeing capital projects. like renovations or amenity additions to maximize your return on investment. Of course, you'll have regular property inspections to proactively identify any needs, as well as auditing property management through reviews of reporting, invoicing, and bank statements, and of course, actual work verification. They'll maintain strong communication with tenants, the manager, and ownership, as well as provide the owner with high-level strategic recommendations to enhance performance and value. Essentially, the asset manager serves as the eyes, ears, and brains on the ground to ensure smooth operations for you. They provide accountability and alignment with your vision on the site. Rather than getting bogged down in the day-to-day yourself, you are free to focus on the bigger picture. To ensure full transparency and maintain alignment, asset managers provide owners with regular reporting, which should include weekly flash reports on key metrics and mandatory actions, a monthly detailed performance and P&L review, which will give you more of the full financial picture, quarterly updates on capital expenditure projects, renovations, major issues, and progress towards your goals, an annual strategy overview, and budget proposals for your approval, as well as real-time communication on emerging opportunities, risks, and priorities. The cadence and format of reporting is tailored to each owner's needs and your preferred involvement level. The goal is to keep you informed to make smart decisions without overwhelming you with the non-essential details. Now, if you're liking this content and you want to learn more about commercial real estate, don't forget to like and subscribe to my channel. Now, here's what you need to ask prospective asset managers as you're going through the hiring process. What is your experience in real estate asset management? Local market experience? Specific asset classes? They should have answers that check the boxes that you have specifically on this asset. What systems and processes will you implement for oversight and reporting? How often will you be reporting to me? How will you evaluate the property initially and identify any issues that need correction? How will you hold the property manager accountable? And how are you going to audit their performance? What are your preferred ways to communicate with me? How are you going to add value beyond the status quo and optimize operations or enhance our returns? Can you share some examples of past successes and failures managing assets? That is one of the biggest ones, in my opinion, are the past successes and failures. If they don't have any failures, they're probably lying to you. So make sure that they are truthful about that and explain to you everything that they took away and how they'll do it better next time. Gaining an understanding of their experience, management approach, systems transparency, that's a big one, as well as their responsiveness and track record is essential to finding the best fit for your needs. Now, the best part? They don't really make a massive dent in your bottom line. If you were looking to hire an asset manager full-time to run your assets, you're likely going to be looking at a starting salary of at least $120,000, and oftentimes much higher than that for the right individual with experience managing assets like these. However, if you're looking to bring on a third-party asset manager, they'll typically charge you between 1% and 2% of cash flow from the asset, which is much more affordable for you and will give you the ability to scale without taking a massive hit to your bottom line. So if you want to buy real estate without being a landlord, a skilled asset manager provides the ideal solution. You get all of the same benefits that you would typically investing in real estate without having to run the day-to-day. With your CEO in place overseeing each asset, you are free to go source new deals, maintain key investor relationships, and focus on high-level strategic direction for your portfolio. Now that you know how to buy real estate without becoming a landlord, check out this video here on the easiest commercial property for beginners to buy.